You're watching Business Lunch. Now, Morgan Stanley's investor survey signals bullishness towards Indian equities. Not much of a surprise there, but let's find out what their reasoning is. Nimesh Shah is here with us to give us the key highlights. Nimesh, over to you.
Hi, Sumita. So, yeah, this is the 17th survey that Morgan Stanley has done for Indian markets. And as you rightly pointed out, the survey clearly indicates bullishness towards Indian stocks. In fact, two-thirds of the investors surveyed in the survey expect India to outperform emerging markets. The key driver for that outperformance is largely to come from earnings. Now, most of the investors in the survey expect an earnings growth of close to 12% in FY18 versus Morgan Stanley's expectation of 18%. So, Morgan Stanley, I guess, is one of the highest on the street in terms of earnings expectations. As far as the macro call is concerned, most of the investors do not expect a single rate cut or any change in terms of rates over the next 6 months. But interestingly, one of the 5 investors, in fact, expect a 25 basis point rate hike. So that's going to be a bit of a surprise if that comes in. So that's a macro call as far as investor survey is concerned. In terms of positioning into various sectors, industrials for the first time in many years has become the top of a top ranking in terms of the preferred bets as far as the India market is concerned. So that's something to watch out for in terms of stock performances. Telecom remains the most underweight even now, despite so much of consolidation happening. They expect telecom to underperform, and 2 sectors where investors are clearly betting on and they expect them to outperform is private banks and consumer discretionary. So no surprises there, but I guess the big surprise is 2/3 of the investors expect India to outperform, and in terms of sectors, industrials after almost 6-7 years is the preferred bet for most of the global investors who have been surveyed in that Morgan Stanley survey.